Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update. It's 3:26 p.m. Eastern Time as I'm starting the video, so about half an hour before the close. And I wanted to do really two things in this video: a brief update on the broad markets, the stock market, and then, as mentioned earlier, I wanted to do an update on the coal stocks as well. I'm continuing to see some bullish developments in that sector, so I think it's one worth either trading or following if you're watching it and wanting to see a little more evidence there. So we'll get into those charts. Let's start out with the broad markets. What happened today is those flags did play out. Was leaning towards the upside break, but we never got that. We broke to the downside and had a pretty impulsive leg down, and then went on and hit my third target there. This is QQQ, and this kind of also speaks to active trader versus swing trader. These were and are the targets, but probably the most significant development today, other than those flags breaking down, playing out, hitting that third target. You had what I call a brief momentum-fueled overshoot. That's a term I use when something security has a lot of downward or upward velocity. In the case of a support level, it would be a near vertical plunge. In the case of a rally, a near vertical rip, and you tend to overshoot the actual support or resistance level that will ultimately contain it. Now, technically, that didn't contain it because, again, it's a momentum-fueled overshoot. I use the analogy of a catcher in baseball, and pitcher throws a 94-mile-an-hour fastball that hits the catcher's glove at the point he's trying to stop the ball, but it's going to spring back. His wrist will spring back and then come back forward again, and that's what that is. So there it is. Now, more importantly than T3 being hit is the pretty impulsive recovery so far of the uptrend line. So this is the primary uptrend line that I've been tracking for many months now, quite a while, waiting for a break to give a sell signal. But it's also the same trend line on the daily chart. And as you hear me often say, when trading a daily time frame, which is much more significant in swing trading than the intraday periods, like 60-minute chart, the most important thing is how you close the day. Because candlesticks, the fat part, the body, is what you want to see close up below an uptrend line to trigger a sell signal or a support level if it's price support. That's where we're at right now. So what we had is an intraday break and a recovery back of both the 275 level. That was a recent. We had a little bit of resistance here. It coincided with the breakout, I believe, in the S&P 500. And then again, this trend line that I've had here for many weeks back here, we're waiting for a breakdown to trigger a sell signal, and every time we kissed it, we moved up. And the minor trend line that we broke on the 60-minute chart that started all this was starting out yesterday morning, was right here. That's that same trend line I had on the 60-minute chart. So it was good for a quick trade so far. And then again, as I'm doing the video with half an hour to go, anything can still happen, but we are comfortably back above the trend line. And if it remains there, be careful on the short side, because that is what happens is traders will see that, react saying, oh, that trend line broke, short QQQ. As I said yesterday, if you weren't short here, it wasn't objective then. There was a little move down this morning. You might have caught if you traded the break of the bear flags, but again, there was too much support below, and we hit it and we bounced back. So looks like we're going to close the week on or around here. Don't split hairs. If we closed, just a hair below it, for all intents and purposes, you're going to have to say that's about a close on it. One thing to consider, I'm sure most of you are aware, it's a 3-day weekend in the U.S., so any positions taken home tonight, long, short, in anything, you have an extra day of overnight risk. Usually a swing trader has 2 days of overnight risk, meaning, if any geopolitical events, anything happens that moves the markets, you have, instead of just one overnight day of risk, in a QQQ or SPY, you have 2, and now, of course, you're going to have 3 with the holidays. So food for thought, and as of now, let's just call it what it is. QQQ is back above trend, and it's been all about the Qs. So hard to get uber bearish right now, despite the drop we've had in the last few days. But here, I'll give you my thoughts, and you can see some additional levels. Let's just move on to some other charts here. So that's QQQ, and I think I just showed you. Yes, I did on the 60-minute chart. T3 being hit, bouncing back. Now look, we're at resistance. 286.32 was resistance before. So if you played the, reversed your positions, covered shorts, and/or went long at T3, this is the first objective place to book profits. If you don't want to go home long in the weekend, maybe we get another ramp into the close. Maybe not. If we do, I don't know. Coin toss odds. I'll be honest with you guys at this point. Whether we come on up here and continue now, once we get underway trading next week, next Tuesday, we'll assess the charts as they come. I'm not going to try to guess what's going to happen over a 3-day week in the very near term. All I can tell you right now is on the daily chart, we don't have sell signals yet on QQQ. And I'm talking for swing traders. So active traders, if you were able to game some or all of this, might be prudent to lighten up over the 3-day weekend and then wait and see what Tuesday brings. So that's it. So probably not a bad idea to trail stops up either if you're not going to book profits here, to just trail stops up if you're riding. Want to see if we get a late day surge up to anywhere close to that level. We could also get a dump. Remember, here's the thing. Think about it psychologically. All the retail traders that chase the Apple and Tesla stock splits are underwater. There's a split right there. And right now, as of now, on average, they're all down about 4 or 5% on Apple, and on Tesla, they're down. That's where I'll just pick the middle of the candle. We're down about 10% or so, or they're down again on average. Depends where they bought. Some bought after, and yes, I say the retail traders because institutional traders, professionals. We know that a stock split means nothing as far as any more value in the stock. In fact, if anything else, I think it's a little worse when you have a high-priced stock like Apple and Tesla split, because you get those people. If you couldn't afford to buy it, when it was $1,000 a share, with free commissions nowadays, you can buy one share. So the people that are coming in, and no offense if anybody's listening to my voice, it doesn't matter whether you have $500 or 500,000 or more to invest in the market. I'm just speaking generically here and trying to tell you what happens after an extended run. And I talked about at the time, a stock split when we're up here can often mark a top, and there's little doubt that a lot of that was retail buying. And again, now those traders are underwater. How they act, are there a lot more that wanted to get in after the split and are going to view this as a buying up? Maybe. So again, I'm gonna go kind of light into the weekend, pick things up on Tuesday, but I wanted to get back to everything and cover the charts of SPY. So here's SPY. I have not modified this trend line for ages. We broke it intra-period. So two things happened on SPY recently, or a couple things. We had the previous all-time high back from February, right before the COVID dump. We recently ran into that level. It was resistance. We consolidated and boom, popped it, broke out, ran up, started running. The media was cheering new highs in the S&P 500, and then boom, we reversed back down. But at the end of the day, all that is at this point, as impulsive as the drop was, and believe me, it could be the start of more. I'm not saying it's not, but as of now, all it is a back test of the breakout. And I told you yesterday, if we back test the breakout, chances are we'd probably go a little bit below it. You usually either come down on it or come down a little bit below it, and that's what we did so far. And it's also like QQQ. What we like to call in trading a stick save. This is a candlestick, and the candlestick was way down here earlier today, well below the trend line, but so far we've rallied back up, right up to the trend line. And again, barring any big reversal into the close, we're going to close on or pretty darn near it. So you can look at it this way. If you want to look at it glass half full, you say a breakout to new all-time highs in the S&P 500 and a successful backtest. Hard to really say at this point in time. We have to, it's successful. Let's see how we trade next week again on Tuesday. Do we follow through? Do we stay above here? But as of now, like I said, hard to get uber bearish in the near term or really go home aggressively short when you've regained the trend line. Or really, we never really we didn't get a closing candle under yet, so we don't have a confirming sell signal here on the daily chart unless we dump hard. There's still 30 minutes to go, or 25 minutes, and it's possible. So if anything changes, I'll maybe add some comments under this post at the end of the day. So that's that. 60-minute chart. We hit my 340 target I think on Monday or yesterday morning. I had these three highlighted, turned up brighter, targets for the S&P 500, and that's what we hit with a brief momentum fueled overshoot, and of course bounce off it. In fact, here it is. This is the chart posted yesterday morning before the market opened. I since added some micro levels, but that's where I had this correction from this going, at least near term. So basically, near term targets have been hit. That 340 was the near term swing target on the SPY. And again, we hit it with a little bit of a momentum field overshoot. So that's it. What it means to me is a risk reward in the very near term to being short is no longer very attractive, and in fact it's probably skewed to the upside right now unless those levels break those daily trend lines. What could carry this rally even further are those divergences I pointed out this morning. They're now confirmed. These positive divergences on the ES, the S&P 500 E-mini futures. That is, you take prices right here from this point down to this point. You have a lower low in prices and higher lows in the indicators with your bullish PPO crossover there. Sometimes the divergences will extend. You can cross down again and then cross back up. You may get you could walk down, double test this level, but as of now, who knows? And again, we've already pretty much, it wasn't an exact hit of these measured targets on the flags, but I can say this, the move is pretty much over. Let me rephrase that. Okay, so you take a measured target of a bull flag, or bear flag in this case, is the flagpole, the length of the flagpole, the impulsive move leading up to the formation of flag, and then you add that to where the flag breaks down. Now that would have taken it, just eyeballing it, would have been a little bit longer. However, the nature of a bear flag pattern, the breakdown, the move down is equally as impulsive as the move leading down to it, or roughly. You've already had a very sharp snapback rally, so it just wouldn't mesh with a typical bear flag. This V recovery right here, once that 33.57 target was hit. In other words, that's not how flags typically play out. Can that happen? Sure, anything's possible, but it's not an ideal. So that tells me that, measured target doesn't mean it must do exactly that. It kind of gives you a rough estimate or rough idea if the flags break down where it's going to go. And so for all intent and purposes, I think that flag has already played out and that move's been met. So here we are again, bounce back to resistance. And this is a potential stopping point, but because of these divergences and everything else, and the fact we're in a primary uptrend, the primary uptrend lines on the daily chart have been recovered, or held. So far, haven't even been violated, only on an intraday basis. That says that primary trend's intact. Guys, I want to catch the next leg down. I'm not comfortable chasing this rally. As far as swing trend trading, it's just not my type. But I haven't had objective entries in a long time. And today, we finally had that, and we came down here, hit these targets, hit the price targets on NQ or QQQ and SPY. That's the first objective entry that I've seen in a while. So it's probably as good a time as any, in my opinion, to take some of those longs home. Nothing heavy, but over the weekend, we might see some more on the upside next week. Again, especially if these 60-minute divergences play out. There's ES, here's NQ, and if they don't, look, break much below today's lows should do the trick next week, because it'll take us down below the trend lines I just showed you on the daily charts. And all these additional support levels, if this support breaks next week, that opens the door for a deeper correction, and even much deeper if we get sell signals on the daily chart, which again we don't have. So that's that. ES, that's NQ right there. Same thing, nice strong bullish divergences. Here, I'll bring it in a little tighter for you. Zoom. And here's your divergence line, positive divergence on the PPO, positive divergence on the RSI, right off that 1150-ish support level. That line's been there a while. So we overshot this one. This is where I figured we'd go down to. I believe, if I'm not mistaken, before the drop even started, I said that was my preferred swing target over the last week or so down here, my ultimate near-term swing target, 11,274, and that's been hit. So again, another reason that I think the bounce came. Now, look at this. We're also back testing this trend line. Remember, not on QQQ, we recovered, but this white trend line, I know I have a lot of lines on the chart, but this one's been here a while. It goes back to the late June lows, this reaction low right here, and boom, breakdown and back test. So this is why, next week will be interesting. Go either way. That is a bounce back to resistance. Also, that 1127 price resistance. So there it is. If you took longs at the lows today, covered shorts, went long, or just went long period, and you just want to play a bounce and get out, I can say this is an objective level to either book profits right now as I'm doing the video, or tighten up stops. Now, futures, I like them because they trade 24, virtually, not always 24/7. They shut down a little after the close each day, and then but they shut down on Friday night and they don't open again until Sunday night. So you do have that period where anything goes, and if you're going to get a gap on the futures, it's going to come on the weekends. That's when you shut down for trading. So you have a little more risk there. Food for thought, something to consider. Okay, let's move on to the coal stocks. That's like I said earlier, I continue to see more and more bullish developments there. This is HCC. I started covering these coal stocks recently. In fact, I was curious. I couldn't even remember the last time that I did highlighted the coal sector exclusively with with trade setups, specifically covering the coal stocks. And I did a search on the site, and brings me all the way back to let me grab it here. Right here, this was February 3rd, 2016, and that was again the last reference I could find where I did a video specifically dedicated to the coal sector and trade setups in that sector. And you can see there's down at the bottom of each post I was add symbol tags, anything covered in the video. I started out by saying I've noticed quite a few bullish trade setups in the left for dead coal stocks, and that's what they have been. It's been a shift towards green energy. Particularly in the U.S., maybe not so much in China, and these are, I was focusing on, I had one Chinese coal stock in there that I did cover, YZC, I believe that was the only one. Some of these have gone to the wayside or restructured, but a lot of these are the same names. In fact, the ones that I've covered recently, I've been highlighting, ARLP is in there, there's BTU, the old CNX, I believe that's Consol Energy. They might have restructured. I think it's a CEIX I was covering now. You had NRP I've been covering, SXC, and that was it. Now let's just look at those back then on February 2016. When we go back, again, these are the same names, ARLP, highlighted recently, and you go back to 2016. And that was in early February, so I'm going to move that cursor right here. That was right about, well, there's February right there, somewhere in this point. And you can see that was the last and only big rally we had. This stock went up 128%. BTU at the time. See, they've restructured, so I don't have history to 2016. It must have done some type of restructuring. Maybe they filed for Chapter 11, shook the creditors off their back, and then restructured, came back, kept the name, just like Pier 1 will probably be doing soon. Pier 1's in bankruptcy protection, liquidating now. But then when you have a lot of goodwill in a name, the company usually comes back, but it's a different stock. CNX, again, that was early 2016, and February was right about here. It was right about this point. No, that's January somewhere. Oh, I guess it was that breakout. That must have been the line. Must have been the setup I had. From there, that was good for 216%. NRP. I'm just trying to show you how much these stocks can move when they do move. And how the technicals will more often not play out. February, that was somewhere in here. Maybe I've mentioned a break over this line, I don't know, but that's where it was highlighted again. So the same story, 360% in that one. SXC is one of my current favorites as well, and back then from early February where it was highlighted right there, before all said and done, the stock rallied for 2.5 years and gained 375%. And then YZC was just as good, but again, I didn't cover that one because it's not showing up. The ones I'm focusing right now are U.S. coal stocks, and because I don't think it's more so about the political and financial landscape here in the U.S. What I mean by the financial landscape, of course, politics come into play. It's an election year. I don't know which candidates, but they might go after the coal states, tell them what they want to hear to get the votes. So maybe there's some bullish developments there. And the other thing too is, in the U.S. here, you have the Fed backstopping companies that are on the verge of going bankrupt. They're shoring up the credit markets, and that may benefit some of these, coal companies because they're all, in precarious positions, because again, coal has been a contracting industry. But I just want to mention YCZ changed its symbol to YCCAY, up about 272%. Okay, that was then, this is now. Let's just rifle through these real quick. These are all the same ones I've highlighted recently. HCC, Warrior Met Coal. Broke out above the trend line recently. I mentioned there's the next buy signal above 1646, and that happened today. There's your breakout. I would like to see more volume coming into these. I'm not crazy about the volume. Price comes first, volume's a distant second. So I do like to see the volume. But with that being said, here's one. This one's up 6% today on the breakout, and that remains my next target up there, target zone. That's HCC. ARCH, this one was on breakout, back test. Since that back test, it's rallied already about 28%. Since the breakout above 35, I mentioned that as the next buy signal there. Objective entry, it's up about 16%, and that is resistance. So this one, you could book profits if you made 16, 20% or whatever, or hold out. And if we get a breakout, of course, this would obviously be quite bullish. This is a multi-month basing pattern, almost year-long right here. And again, a breakout of that I think would be quite bullish. I have a longer-term trend line in there that may come into play. So we'll continue to monitor it. Again, volume is okay on the move up recently, not real strong. And maybe a stealth rally in the sector. If it gets, if these guys continue to break out, you see more and more breakout, it'll increase the odds that you might be in one of those, triple-digit runs coming up, like where was, previously highlighted, or at least in advance back in 2016. ARLP needs to get back above that trend line. Not looking so hot until it does, but if it does, 385. If it can take out 385, $5. XC broke out the other day, as mentioned, back tested, and it's clearing. I added one more line, guys. I had a 358 as a breakout level, which it took out today, but I added a line at 364, and it's held that all day, just under at 363 right now, because what I wanted to capture are the previous reaction highs from right here, here, and here. We had some spike highs above my 358 line, so to give it the benefit of the doubt, we need to take out 364 with conviction. It's not going to happen today. I mean, even if it does, there's not enough time before the close to really count that as a breakout. I'm a little suspect of anything that breaks out, a few minutes before the close. So one to watch for next week. And again, just a lot of upside potential, and unfortunately, some of the better looking charts right now from a risk reward perspective. The market may do its thing next week and resume its uptrend, but the risk reward in the stock market, especially tech, is still awful in my opinion. That doesn't mean the trend can't continue, doesn't mean there's more upside, it just means the risk reward. And what does that mean? Well, look at the drop we had in the last 2 days. That's what happens when technicals are ignored, sentiment, extremes, and then they finally play out. It happens with a bang. And, an active trader might have sidestepped that if they were long, got out early on the sell signals yesterday morning. But average Joe came home from work and had no idea why their Apple that they bought after the split, or Tesla, why they're underwater so much so fast. I can assure you a lot of people didn't think that was even remotely possible. All right, so there it is. Big move if it can take that out, and a lot of upside potential here on SXC, Suncoke Energy. BTU broke out above the downtrend line the other day. Not really running hard yet, but it's holding above the 252 support. First target here, that trend line, then 444, then 523. NC needs to break out, has yet to do so. So that's what I'm looking for. More and more of these break out, the more likely we are to start building on the upside momentum in these. NRP was rejected at the downtrend line, so still awaiting a buy signal on the breakout above the trend line, and then 1194. CEIX needs to hold at 495. It's not doing it today. Hopefully get back above there. So this is why, again, I'm not red hot on the sector. I have some exposure, and I'm just keep layering in on strength and only strength. I'm not going to, but if I see a lot of these other ones breaking down, I'll tighten up stops on the few that I do have. And I mentioned, by the way, guys, I mentioned KOL. As one proxy for the coal sector. It's the coal ETF. Let me go to that real quick. But I'm not as keen on coal. It does have resistance there, but coal is chock full of non-U.S. stocks here. Let me pull this down and show you. Here's coal. So these are the things I look at. I don't buy an ETF blindly because it says it's a coal ETF. I'm not as keen on those. So the KOL, coal ETF, almost a third are in China. The companies, a fifth in Australia, in Indonesia, Canada. You only have about 7.5% in the U.S. So you're not hitting the ones that I'm focusing on. Well, with the more constructive charts. So that's why I'm focusing on these individual trade ideas. Excuse me, I hit the pause button by mistake. And then what I do is I strategically or tactically add in. I like to build my own little mini ETF, if you will. If the ETF of a sector that I'm trading doesn't have the names I like, or I go through that ETF and the holdings of the sector, and some are very bullish and some are not so much, and I you can usually outperform a sector by picking if you're bullish on the sector and the sector is bullish, then you pick the most bullish stocks within the sector and avoid the most bearish or those with unambiguous charts or ambiguous charts. METC, inverse head and shoulders, bottoming pattern right there, alternative necklines. You have the downtrend line right here, but you also have this neckline here, breakout, and we broke out and back tested, but the big level I've been mentioning is about 304 to 317, call it 317, needs to break that. Is it objective on the back test? Yes, but I'd like to see a little more work in this sector right now, in this particular stock too. So I'm just kind of watching that one. I haven't taken anything in that one yet. CCR console needs to break out of the trend line. CTRA needs to take out 494 or any pullback to this trend line, or the downtrend line would offer objective long entries. AREC. On that too, I'd also preferring breakouts right now in this sector than pullbacks to support, because we can see a few that have pulled back to support have actually broke it. So, and that's it. HNRG, no buy signal, not even close yet. I said I had to take out these intersecting downtrend lines, and hasn't done so. So again, work to be done, but as I highlighted, some breaking out today and some running, and money to be made in the sector. Again, best to trade them tactically. Buy the ones that break out. Or if they've broken out already and have a constructive chart, then you can buy the pullbacks to support. And but I still wouldn't put a full allocation to the sector. A full allocation does not mean your entire portfolio. It just means to say, hey, if there's a bullish sector, whether it's gold mining stocks or the tech sector or whatever it is, utilities, I'm going to allocate, let's say, 20% of my portfolio, 30% of my portfolio to that. That would be a full allocation. We're not there yet on these. These are just stocks that I'm nibbling and watching, and a way to diversify. Again, it's been slim pickings really for long side trade ideas lately, and shorts for that matter. So this is one sector I'm watching. We will wrap it up here, and probably pick it up next week, because I'm looking at the markets are going to close right about where I did the video. So everything I covered earlier will pretty much hold true for the weekend market wrap. This has been Randy Finney with Right Side of the Chart. Have a great weekend, guys.